what China's saying is they're willing to come to the table and talk. They say as long as the US is being sincere, is their wording. This was commentary from the Commerce Ministry in Beijing overnight. Um, Basically, what I wouldn't overread this as being like a thaw or an olive branch, so to speak. It's kind of a response to clearly what they describe as outreach from the US side. And we know we've had a lot of commentary from US officials that there's at least some level of talks underway or some level of communication going on with China. So this is kind of a formal response to that. But they also make clear, Commerce Ministry does in its remarks, that if the door's open, they say they're willing to talk. The door's open to talk, but they say they're also willing to fight to the end, and that's their language, making the point that they can gird in and dig deep on this trade war if they want to. So yes, it's a headline that both sides might be coming together to talk, but really it's going to be the beginning of what's expected to be a long process, Alex.
And is there any sense of who needs to move first here in terms of getting these talks going? Because we know how President Trump likes to, hop on a phone call or have a meeting with these world leaders and negotiate. He likes to negotiate. Is there any sense of who's going to move first?
Well, this is where you get into the argument about who has leverage and who can win this trade war. There are those who say the US has leverage because it's the biggest customer of China, and obviously China cannot respond with like-for-like tariffs, given it doesn't buy as much stuff as the US. But what we do know is both economies are showing some signs of hurting. We had good labor data from the US this morning, but we've had other indicators on consumer sentiment and on industrial sentiment and production hinting at some pain there. We know retailers are warning about what's coming down the pipes. We know consumers are worried about inflation here. So clearly there's potential for disruption and pain to the US side. China is stressing it can dig deep on this and it's willing to absorb whatever pain is coming down the pipe. So in terms of who has to move first, you'd probably have to say that it might be more in the US interest to get some talks going on this, given the concerns over supply chains. But the administration's clear-eyed in what they want to do as well.
What did you make of the finance minister in Japan? If we just switch chats for a second, talking about Treasury holdings could be a negotiation card in its trade negotiations. Half of Japan's $943 billion in FX reserve is probably in Treasuries, many say. What did you make of this?
Again, on a headline basis, an extraordinary comment from the finance minister, an extraordinary comment from the finance minister of such a major economy and massive holder of US Treasuries and an ally of the US. So that's your headline. But in terms of the practicality of what the Japanese finance minister is saying, I mean, on paper, yes, anyone who is a big holder of US Treasuries can turn around and say, well, if we don't like doing business with you, we're going to sell your debt and we're not going to fund you anymore. But that works both ways. It's kind of mutually assured pain, because if they go into a fire sale of Treasuries, then they risk losing money on their own assets and their own holdings. And that's probably not in Japan's interest either. So I think this one's more about the warning and tells you more about maybe where relations are at, than perhaps a practical tool that Japan can use. Because people make the same point about China. Of course, it's a threat, and it could happen, but it wouldn't be without pain for those who are selling as well.